Could Dogecoin, the so-called meme cryptocurrency, be the biggest scam in the digital currency world today? This question has been echoing in the financial community, sparking heated debates and dividing opinions. But before we delve into the controversy, let's take a step back and understand what Dogecoin really is. Born as a joke in late 2013, Dogecoin was created by two software engineers who decided to make fun of the cryptocurrency frenzy by creating their own digital coin. They chose the popular Doge meme as their logo, which features a Shiba Inu dog, accompanied by multicolored text in Comic Sans font on the coin's logo. A lighthearted jest, nothing more, or so it seemed. Forward to today, and Dogecoin is far from being a laughing matter. With its value skyrocketing, it has attracted a legion of followers, some of whom are serious investors betting on its future. This meme cryptocurrency, once a symbol of internet humor, has morphed into a billion-dollar digital asset. But here's where the plot thickens. The meteoric rise of Dogecoin has raised eyebrows. While some see it as the democratization of finance, others regard it as a dangerous bubble fueled by speculative trading and celebrity endorsements. This divide is what makes the Dogecoin phenomenon so intriguing and controversial. On one side of the divide, you have proponents who believe in the potential of Dogecoin. They argue that its popularity and wide adoption could make it a viable digital currency. On the other side, skeptics question the intrinsic value of Dogecoin, labeling it as a speculative bubble that could burst any moment, leaving investors high and dry. This controversy has put Dogecoin under the microscope, with financial experts, investors, and regulators all scrutinizing its legitimacy. The debate rages on, with no clear consensus in sight. So, is Dogecoin a legitimate investment opportunity, or just another scam in the annals of financial history? As we delve deeper into this controversy, remember the world of finance is often a game of risk and reward, and with Dogecoin the stakes have never been higher. Before we delve into Dogecoin, let's take a trip down memory lane and revisit some of the most notorious scams in history. Our first stop is the early 20th century, where we meet Charles Ponzi, the namesake of the infamous Ponzi scheme. Ponzi promised investors outrageously high returns, paid for by the funds brought in by newer investors. However, the underlying investment didn't exist, and the scheme eventually collapsed, causing massive losses for the investors. Forward to the turn of the 21st century, and we find ourselves in the midst of the Enron scandal. This energy company manipulated its accounting books to appear more profitable than it was. When the truth came out, the company's stock price plummeted and investors lost billions. Next, we turn to the Madoff investment scandal. Bernie Madoff, a former chairman of NASDAQ, operated the largest Ponzi scheme in history. He deceived investors into believing they were earning substantial returns when in reality, he was using new investors' money to pay old investors. This house of cards collapsed in 2008, leading to investor losses of approximately $65 billion. Now, how does this relate to Dogecoin? Well, critics argue that Dogecoin, like these historical scams, is built on shaky foundations. They claim that its value is artificially inflated, driven more by speculation and hype than by any inherent value. They point out that, like Ponzi's scheme, Dogecoin relies heavily on new investors to drive up its price. And similar to Enron and Madoff scams, they argue that the real value and profitability of Dogecoin are obscured, leading potential investors astray. These scams serve as a stark reminder of the potential dangers lurking in the financial world. Could Dogecoin be the next name added to this infamous list? Now let's compare Dogecoin to traditional investments, such as stocks and bonds. When we talk about traditional investments, we're often thinking about stocks, bonds, or real estate. These are assets that have been around for decades, even centuries, and have proven time and time again to be reliable sources of wealth generation. They're backed by tangible assets, whether it's a company's profits, a government's promise to repay, or a piece of property. On the other hand, we have Dogecoin, a digital currency that's only been around for a handful of years. Unlike stocks or bonds, Dogecoin isn't backed by anything tangible. It doesn't represent ownership in a company or a promise to repay from a government. Instead, its value is largely dictated by supply and demand, and the faith of its holders. When we look at the volatility of Dogecoin, it's clear that it's a whole different ballgame. Traditional investments have their ups and downs, but they're generally not subject to the wild swings seen in the world of cryptocurrencies. A stock or bond might fluctuate a few percentage points in a day, but Dogecoin can swing wildly, sometimes doubling or halving in value in a matter of hours. There's the question of regulation. Stocks and bonds are heavily regulated by government bodies to protect investors. There are laws against insider trading, market manipulation, and fraudulent practices. But with Dogecoin, it's a bit like the Wild West. There's little to no oversight or regulation, which leaves investors exposed to a higher level of risk. While Dogecoin might be enticing with its potential for high returns, it's important to remember that it also comes with a higher level of risk and uncertainty. It's not backed by anything tangible. It's highly volatile, and it lacks the regulatory protections found in traditional investments. Traditional investments, Dogecoin carries a unique set of risks that could spell disaster for unsuspecting investors. The debate over Dogecoin's legitimacy is more than just a question of value. It's a tug-of-war between traditional financial wisdom and the audacious new world of cryptocurrencies. On one side of the debate, you have the skeptics. These are financial experts who've navigated the stormy seas of Wall Street, who've seen the rise and fall of many a golden goose. They argue that Dogecoin, like many cryptocurrencies, lacks intrinsic value. It doesn't represent a stake in a company or a claim on an issuer's future profits. Instead, it's worth only what someone else is willing to pay for it. In their view, this makes Dogecoin dangerously volatile and an unsuitable investment for the unwary. But on the other side, we have the believers. These are the crypto enthusiasts, the tech-savvy investors who see Dogecoin and its peers as the future of finance. They argue that just because Dogecoin doesn't fit into traditional investment models, it doesn't mean it's a scam. They point to the vast, untapped potential of blockchain technology, the decentralized nature of cryptocurrencies, and the growing acceptance of digital assets as a form of payment. The believers remind us that all investments come with risk, and that the potential rewards of Dogecoin could be astronomical. They argue that while Dogecoin may be a speculative investment, it's no different from investing in a startup or a new technology. They believe that those who dismiss Dogecoin outright may be missing out on the financial opportunity of a lifetime. So, where does this leave us? It's clear that the debate over Dogecoin is far from settled. The skeptics have valid concerns about its volatility and lack of intrinsic value. The believers see a revolutionary new asset that could redefine our financial system. Such conflicting views, the question remains, is Dogecoin a promising investment or an impending financial disaster? So after all this, where does Dogecoin stand? We've traversed the murky waters of the Dodgecoin controversy, sailed through the scams of the past, and weighed Dogecoin against traditional investments. Also, we've been part of the heated Dogecoin debate, and now we've arrived at the verdict. Let's take a step back and summarize the main points we've discussed. Dogecoin, like all cryptocurrencies, is a speculative asset. This means it's an investment that carries a significant level of risk. Its value can fluctuate wildly, and there's no guarantee of a return. In fact, there's a chance you could lose your entire investment. But it's not all doom and gloom. Dogecoin also has the potential for high returns. It's a part of the burgeoning world of decentralized finance, a realm that's challenging traditional banking and finance systems. It's the Wild West of the financial world, where fortunes can be made and lost in the blink of an eye. However, the fact remains that Dogecoin was created as a joke, a meme. Its creators never intended for it to be taken seriously. Here we are with many investors pouring their hard-earned money into it, hoping for a miracle. Now here's the crucial point. Whether you're considering investing in Dogecoin or any other speculative asset, it's essential to proceed with caution. Do your research, understand the risks. Only invest money you can afford to lose, and most importantly, don't get swept up in the hype. In the world of finance, there's a saying, high risk, high reward. But it's equally true that high risk can lead to high losses. And with Dogecoin, the risks are as real as they come. The end, whether Dogecoin is a scam or a legitimate investment opportunity, may depend on who you ask. One thing is certain. In the world of finance, nothing is ever guaranteed.